Hi there, and welcome to HR Live. Today, we're going to unpack some of the latest employment and economic data to enable your business to formulate some effective strategies in order to be able to attract and to retain staff for the remainder of 2022 and into 2023. My name is Andrew Colita. I'm the Operations Director of On Demand HR. And since 2010, we've been helping businesses of all sizes to navigate through Australia's complex industrial relations system. And throughout this time, we've appeared in more than 120 matters before the Fair Work Commission and other bodies. And it's truly this practical experience that goes well beyond theory that ultimately leads to decisions and outcomes that are in line with the business's objectives and not simply based on mitigating risk. We also give you an opportunity to register as a free online member of On Demand HR in order to get access to free high-level HR and workplace relations advice, templates, and a whole lot more. So you can learn more about this by visiting www.ondemandhr.com.au/online. Okay, with all of that out of the way, let's get into the latest employment data. So what I've put together here for us to have a little bit of a dissect is a little bit of a summary of the current economic environment that we're facing. So as has been well reported in the media, the RBA has been increasing the cash rate and effectively driving interest rates up in order to curb the current period of inflation that the economy is currently experiencing. What we need to be cognizant of, as you can see in the graph on the left-hand side, is that if you look at from a perspective of time or over the long term, since 1997, we're still at a fairly low interest rate period. Yes, we're rising up from the record low interest rates that were put in place throughout the COVID pandemic, but over the long term, we're still at quite low interest rates. Then moving into the middle chart there's a new piece of data that's only been released for the first time this month by the Australian Bureau of Statistics, and that is the monthly CPI indicator. Traditionally, this measurement has only been taken on a quarterly basis, and it's an interesting signal from the ABS indicating that it needs to, measure inflation on a more frequent basis in correlation to the current interest rate rising period that we're going through in order to measure the effects in a little bit more of a real-time nature. Now, one of the things I had to draw back on my economic studies back at school and throughout university was the Phillips curve. And I think it's very relevant in today's economic environment. And what the Phillips curve teaches us is that in a higher inflationary environment, we tend to experience lower unemployment rate. And conversely, in a lower inflationary environment, we tend to experience a higher interest rate, a higher unemployment environment. Now, there are some exceptions to this as measured by the Friedman-Phelps augmented Phillips curve, which talks about the simultaneous raising of unemployment and inflation, but we won't go into that today. But I think it's a very interesting environment. So we've got the RBA trying to increase interest rates to keep inflation at bay. And as inflation rises, as inflation decreases as a result of the interest rate rises, we should see unemployment start to increase and it become a little bit easier for businesses to find and attract in talent to fill their vacant positions. So moving into, the employment-related data, we can see that this high inflationary environment has had a significant effect on unemployment. We continue to be at record lows of around about 3.5% unemployment. And this is causing businesses to continue to face challenges in finding and attracting talent to fill their vacant positions. We can see a little bit of an uptick right at the bottom here, bottom of the curve in August 2022, but it's barely much of a response. Continuing on, we then look at the monthly hours worked. Now, this is again at record highs over the last decade, and it continues to show the strength in the employment market. It continues to show that anyone, not only that anyone wants a job, can get a job, but anyone that has a job can work as many hours as they want to. This is again supported by the number of employed people. We continue to see record high number of people employed again over the last decade. We're not seeing the impact of international migration. We can clearly see in this particular chart the two impacts of the initially the Delta and then following the Omicron waves. But then the number of employed people again has rebounded very, very quickly to show the resilience of the Australian economy. Again, we see the same message coming through in the underemployment rate. We're at record low underemployment. Again, driving home that message is not only that anyone who wants a job can get a job, but anyone who has a job can work as many hours as they want. Now, typically in I guess, a low unemployment environment, you would see that the nature, the forces of supply and demand at play, driving wages up. If there's not enough, if businesses are competing for fewer candidates, they're more likely to have to pay a higher price in order to attract them to their business. But we're not seeing the data reflect that just yet. Again, this is a highly lagging indicator and continues along a fairly similar trend as it has done throughout the last decade, with the exception of the COVID blip. And so what this means is, at a high level, the inflationary environment that we're seeing is not caused by increasing wages. It's caused by more of a supply side shock as a result of the war between Russia and the Ukraine, and also the lingering impact of COVID-19, as well as what I would call some revenge spending. And what I mean by that is, throughout the COVID period, households couldn't really spend a lot of their money and they had nothing to spend it on. They saved their money. Now that things have opened up to at least a large degree across Australia, they've got a lot of money and spare savings to spend, and they're using that power to buy cars, go on holidays, or whatever it is that tickles their fancy, driving prices up. But we need to be very conscious of the difference between a leading indicator and a lagging indicator. And in my view, employment-related data tends to be lagging and really measures what has already happened rather than measuring what is currently happening now. And from my perspective, when it comes to the employment market, a more reliable and leading indicator tends to be the data that's provided by the job boards. And they provide for some very interesting reading this month. So we look at the data from Seek, and I'll just get rid of myself from this picture here, just so we can see the full data. We start on the top left-hand side. So for September 2022, there was a national job ads decrease of 5.2% month on month. This means that in September, there was 5.2% less job ads posted compared to October. Now, over the year, this is still up on a significant amount of 15.5%, but we need to be cognizant that this is coming from a really low base of job advertisements throughout the COVID period 12 months ago. So that number, in my mind, is a little bit inflated. But what we are also seeing that corresponds with the reduction in job ads month on month is an increase in the number of applications per job. And that is up 10.3%. So we've got fewer jobs and more candidates competing for the same job, which is likely to see a increase in the unemployment rate, because it's starting to, the market may start to be swinging back from a heavily candidate focus a little bit more more in favor of the employer. Now, what industries are driving this change? Well, there's three of the largest employers in Australia. We've got the hospitality and tourism, the trades and services, and the manufacturing, transport, and logistic industries, driving this trend or beginning of a trend potentially in the reduction of job ads available. And as you can see by the data in the bottom left of your screen, it's fairly consistent across Australia's three major employment markets of Victoria, New South Wales, and Queensland. And as we wrap up this session for today, because there's been a lot of data and a lot of analysis here, I just wanted to throw up this slide I put up before as a reminder to businesses. 72% of businesses surveyed indicated that they had at least 3 failed recruitment campaigns over the past 12 months. So, from a New South Wales perspective, and it's certainly true across the rest of the country, it's facing its most significant workforce challenge in more than 50 years. And that's Daniel Hunter speaking there, who's the Business New South Wales CEO back in June or July of 2022. So it's definitely something that I guess the business market needs to stand up and take notice of what's going on in out there in the recruitment market. We've talked ad nauseum around how you need to look at your recruitment processes all the way through and adapt and change your mindset. I'm not going to go over it again now, but to have an opportunity to speak out to someone at On Demand HR about your recruitment strategy in this market in response to what's going on, or for that matter, for any other HR or workplace relations issue that your business might be facing, I think that the best way to reach out to us is to register for a free online membership. And that's going to give you high-level support and a whole other raft of other things that I'm going to talk about in a minute. So, look, I just wanted to thank you very much for joining us for this session. I know we've gone through a lot, and if you'd like to, again, break it down or dissect or ask any questions, feel free to reach out to us, and looking forward to seeing you all in the next session.
If you're watching this video, I'm going to have a guess that it's because your business is facing some kind of HR or workplace relations challenge. Well, I've got some good news. You're exactly the type of business that we created our free online support membership for. And it provides you with a high-level HR and workplace relations advice when you need it, as well as a whole heap of other benefits.
To learn more about what's included with free online support and to apply for membership, please visit ondemandhr.com.au/online.